Hello and welcome to Pro Trader Strategies Market Commentary for Friday, March the 27th. I'm Eric Wilkinson, and you may recognize me from mainstream media where I've talked about the economic, geopolitical, and then market analysis. Well, I do about those same things in these daily market commentaries, but layer on top of it some option strategies that I use to implement into my portfolio to increase yield. Hopefully you guys can get some takeaways from that because I have specific rules in and around every single option strategy in order to follow before you implement that strategy around any given market assumption. Okay, so the rules are based on the performance of those option strategies. You implement it into your portfolio in your own way. I'm not here to give away any type of trade recommendations. I don't believe in that. I don't think that living it off the cliffs is a right way to do it. I hate the herd mentality. So what I want to do is teach you guys how these options strategies work and how you can implement them according to your own market assumptions that you come up with. All right, without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, now we usually start off with talking about economic data, but we know with this whole virus thing that's been going on that the economic data is so behind us that it's not really giving us a very good look as to what might happen in the future. We just talked about the jobless claims yesterday coming in at 3.28, 3 million, just over 3.25 million jobless claims. That is astronomical. Normally we're getting in around 300,000 maybe on average. So that was just blown out of the park. I talked to a friend of mine that's in the hotel industry. He's telling me that they laid off or furloughed about 95% of the employees there. They also said that 10 to 15% of that area of travel and entertainment, being the hotels, are never going to come back. Some of those hotels, 10 to 15%, are never going to come back online. They're just going to be bankrupt, basically. All right, so without further ado, let's talk about some economic data, even though it is behind us. Remember, core PCE, which is the prices for personal consumption expenditures, came in line with expectations. Personal income, that's out the window, right? It increased by 0.6%. Normally we would be saying that is awesome, but talking about the unemployment claims, we can see that personal income is going to dramatically drop. We were seeing that start to increase, which is good once you get to like full employment. Right now, for a corporation to hire on a key employee, they have to kind of poach them away from somebody else. Well, that person might be on the unemployment line right now, and that wage can be negotiated a lot easier by the corporation at that point. Personal spending in line with expectations, not seeing any spikes there. I would think that we might see some personal spending spikes as people are buying loads of toilet paper that they aren't going to need for the next 10 years. But that's about it for the overall markets. We did get University of Consumer Sentiment coming in at 89.1. It's expected to be 90. All right, inflation expectations in line as well. Those probably will start to come off a little bit as we're seeing things like crude oil fall out of bed. Now, not really fall out of bed, but we're starting to drop precipitously as the day goes on because it's down $1. Why? The government said it was expected that they were going to start really buying up a lot of crude to fill up the oil reserves that we have. Well, it seems like there's a bit of a hubbub about that, and they are holding off on filling up those oil reserves. That was expected to help out the U.S. oil manufacturers and producers of that. It looks like it's being put on ice for at least right now. So crude oil starting to slide a little bit today. Gold futures are off just a little bit. You know, I've talked about this. We get up into that 1700 and it really starts to struggle. We do have tweezer tops up there at 1700-ish. We might go up there and test it, though, if we start seeing the equities retest those lows we just saw a few days ago. We got a nice bounce and starting to get a little bit of a correction going on today. So hopefully it's not just a new thing where we're seeing lower lows and lower highs, which we'll talk about once we get into the equity charts there. Bonds are starting to move a little bit higher by about 1.5 here. Again, they are about stuck in the mud. We did see 1 and 3 year notes go into negative territory. I don't think we're going to see bonds go into negative territory, but I do believe that they are going to be hovering around the 1-ish% for the foreseeable future, especially with the Fed having unlimited buying power in the markets. So we might be able to see that going forward there. All right, so that was the VIX. VIX is pretty much holding on to those elevated levels. Here we have the Dow Jones Industrial Average down about 625 points, but you can see well off the lows of 21,316. So that was, another 400 points lower than where we are now, down 1,000 points in the markets at one point there. I think that was overnight there. So NASDAQ off by about 200 points. Most markets giving back about half of what they rallied yesterday at this point in time. Back to the point of control here in the NASDAQ. So it's going to be a comfort zone. And I talked about this yesterday in the daily market commentary, where we were seeing the markets want to stay within this range. And I still think it's going to want to stay right here. Now, some people are calling for the markets to have these lower highs, and if you look at the highs there, we've got lower highs. We could call this that one, but lower highs, lower lows going on right there. So a lot of people saying, the market's wanting to do this and maybe retest these lows there and possibly even go a little bit further. My assumption, though, is that we are going to stay within the areas of those Fibonacci's there, at least for a week or two. I think we're kind of bang around back and forth. We might still see that volatility, but I think that we're going to be in a trend for a little bit while moving sideways there. No V-shaped recovery, guys. It does not look like. All right, E-mini S&P is off by about 58 points as well, 57-ish. Again, overnights, these lows were printed during the day session as well. So that is a clean number. But again, see, we're kind of bouncing around back and forth. Markets are down, but they seem pretty orderly at this point. Let's talk about the trades that I've done. Facebook. All right, you guys remember that I have on a long position in Facebook where I got the stock put to me on at around 200 or sorry, 175. So I'm long Facebook at 175, obviously a little bit higher than where we are now. And I've been doing some managing of that risk by doing covered call strategies, lower my overall basis. That's how we work these things down, especially in bear markets, to compensate ourselves for the lack of performance in these different instruments. I always suggest doing some covered call strategies, not necessarily trying to get out of every one of them, but throwing some covered calls on at least some of them, where I've talked about that with, what was it? MasterCard. I have on the 245 calls, which was being tested. So some of those might get called away from me, but it's only about a third of my position. Facebook, similar situation here. I went in and sold the April 200 calls in there, and I collected originally on the 12th of the month, I believe it was. Yes, on the 12th, I collected 96 cents. So that was not too long ago, obviously. The market was a little bit lower than where we are right now, actually right about where we are right now, and got that theta decay, some volatility really coming out. That's what we're trying to do, take advantage of that high volatility. I'm long at 175, selling it out at 200 doesn't seem like a bad price location up here, does it? So able to get out of those, sold them for 96 cents, bought them back this morning for 15 cents on the day. So if we get more of a move higher, I'm going to look to cover some more calls in Facebook. Same thing with the rest of those that I have long stock in my portfolio, looking to do covered calls on any type of bounce, because I think we're going to get these bounces, pullbacks, and some bounces. I don't know that we're necessarily going to go down and test those lows down there, but it is a possibility, and if that happens, I'll be happy to have been doing these covered call strategies and lowering my overall cost basis on these trades. All right, so that's about all I've got for you guys. Check out the webinar that we did on the put calendar. That's a really good one, especially on these kind of bounces. If you think that the market is going to trend sideways and possibly fail a little bit down the road when we start seeing some of these earnings coming out, this is a good strategy to set up for that type of environment where we're getting ready for those earnings. Maybe something in travel and leisure where the airline stocks got a bounce, or maybe Marriott got a bounce here. Looks like the cruise lines are not maybe going to get the bailout that they were hoping for. That could hurt them down the road as well. So we're looking to put on strategies for a market that has a little bit of a bounce. Once they get these sell-offs and looking for a little bit of a bounce, maybe trade sideways and then fall off after our options expire. All right, so that's kind of what we're looking for from that type of strategy. All right, so this would be good for something like a put calendar if the market were to trend like that. So that's what we're trying to accomplish here, and I hope you can check those out at protraderstrategies.com. Please take a moment to run over our disclaimer, as it talks about that we are an educational company. Everything we talk about in this is not construed as investment advice. We are an educational company trying to teach you guys how to swim for yourselves. I'm not here to swim for you, is ultimately what we're trying to get down to here. And there is a possibility you could lose money, and you could lose all your money supposedly. With all of that being said, trading is very risky. So take a moment to go over that. And if you can't take that, take it easy.